Welcome to Pindar Poetry. We hope you learned something new.
In this video, I will explain how to file income tax for your Demat account. First, gather all necessary documents, including transaction statements and dividend reports. You'll need to differentiate between short-term and long-term capital gains, as these are taxed differently. Also, remember to account for any dividends received. This initial step ensures you have all the information ready for accurate tax preparation. Next, let's calculate your capital gains and losses. Short-term gains apply to assets sold within 1 year of purchase, while long-term gains are for assets held longer than 1 year. It's crucial to accurately track your cost basis for each investment. You can also use capital losses to offset capital gains, potentially reducing your overall tax liability. This step is key to minimizing your tax burden. Now, let's cover reporting dividends and interest. Dividends from your Demat account are typically reported on Form 1099 DIV. Qualified dividends receive preferential tax treatment, often taxed at capital gains rates. Non-qualified dividends are taxed at your ordinary income rate. Don't forget to include any interest income, which is also considered taxable. Proper reporting ensures compliance and avoids potential issues. Finally, it's time to file your tax return. You can use tax preparation software or consult a tax professional to ensure accuracy. All your capital gains and losses are reported on Schedule D and dividends on Schedule B or D, depending on their type. Double-check all entries before submitting to avoid errors. Remember to check the description for a link to the Echo Dot smart speaker and other great deals. Filing correctly helps you stay compliant and avoid penalties.
Thanks for watching. Consider subscribing if we helped you.